Do we need to worry about a bubble with respect to technology and in particular artificial intelligence? And to me, I think this is bubble question gets asked quite often. And, every time something goes up quickly or by quite a bit, we always talk, is this a bubble? Is the bubble going to burst? And I guess one of the reasons why we're talking about an AI bubble is for our chart, our first chart here, our only chart for this segment, which you can see here, the forward PE ratios of the Magnificent Seven. And we can see here that they've started to creep higher. Our lowest, as I mentioned, Google, Alphabet. It is the cheapest of the Mag 7, 21 times forward earnings. But you can see clearly that Amazon, Apple, Microsoft, NVIDIA, and Tesla, wow, 90 times forward earnings. These are all well above 30 times earnings. Numbers that tough to maintain. Meta, probably the second cheapest, 26, 27 times earnings. Obviously, we just can't look at PE ratio on its own. You want to look at the companies itself. And I tend to look more at PEG ratios than PE ratios. But PEs are, in my opinion, the reason why we're asking the question, is this a tech bubble or an artificial intelligence bubble that will burst? All these names are using AI. Some of them are producing the chips for AI. Some of them are using AI to better their business, to better their search, to better everything, like Tesla, like Google, Amazon. And so AI has really caused or been the cause of these companies really shooting higher in terms of price of their shares. Price appreciation has really gone up by quite a bit. But when you take a look at their price to earnings, and we can put that up again, versus their growth, you look at an Alphabet, well, yeah, trading at 21 times forward earnings, but there it is. But they're growing cloud at, I said, 35%. Their EPS up 37% year over year. So they're growing at a rate that is well above their price to earnings. So their PEG ratio, price to earnings to growth, to me makes sense. Maybe you want to own Google at these prices because I think it's relatively cheap. It's growth at a reasonable price. The price is reasonable, even though it's a bit on the high side, but its growth is a lot higher than where the price is trading. Meta, another one. We're going to hear from Meta tonight. Are they going to tell us that they're growing faster than 26%? They're going to be 26 times earnings. Are they growing, 30%, 35%? Do they justify a 26 times multiple? Microsoft trades at 33 times. And I think that's why, the stock has been kind of petering out and not moving a lot higher because it's expensive. Apple, we talk about their growth rate being high single digits, yet they're trading at a 32 times multiple. So AI, a bubble? I don't think so. My opinion would be, sure, there are some stocks that are overvalued, perhaps, or slightly overvalued, or maybe fair value at best. However, these companies, unlike previous bubbles that have burst, tech bubbles of 2000, 1999, 2000, these companies have real earnings and real growth, significant growth. Take a look at NVIDIA, right? We've seen NVIDIA last quarter grew over 100%. The quarter before that, over 200%. So is a 41 times earnings justified? Absolutely. For many investors, it's justified. So, you look at Tesla, 90 times earnings. That's a more difficult one. And that's why a lot of GARP investors, growth at a reasonable price investors or value investors, tend to stay away from Tesla. It's more for the momentum players. They tend to be more into Tesla than the GARP investors. So overall, you want to look at all these names. You want to look at, is tech in a bubble? I don't think so, because these names have earnings. They have solid earnings. And in many cases, they actually have earnings that are higher than where the stock is trading, where that price to earnings multiple is trading. And you can tell this very easily by PEG ratio. So all the people that are saying, I won't get involved in this AI, it's a bubble waiting to burst. Well, maybe one day it may come down and may burst, I guess. But I don't think anytime soon. I think the valuations are justified for many of these tech names. And I think they still have room in a lot of them to move higher.